Hello, my name is Carlos Pacheco. I'm happy to be here as part of the Global Digital Week. And I want to tell you a bit about myself. I'm a consultant for Globant. Globant is a technology company that is focused on numerous industries, but my personal focus is financial institutions. In my career, I've been a consultant in McKinsey and for quite some years in MasterCard, where I had the opportunity to serve both financial institutions and to lead financial inclusion efforts. And that's what I want to tell you more about today. I want to share some of the lessons that I have experienced in my years in MasterCard. So this presentation is titled Financial Inclusion Lessons for a Digital World because it merges both worlds, the world of financial inclusion and on how to use the digital tools that are now available to make sure that we can go further in the effectiveness of our financial inclusion efforts for financial institutions. And here's the key lessons for these that we're going to dive in this presentation. It's about what we have learned, bringing new tools and working in the field. And our first lesson has to do with demographic priority. What is the focus or the most effective focus of a segment to further financial inclusion? The second lesson will tell you more about what is the optimal product design to be more effective in these efforts. The third does a deep dive in one key use case. And this use case is about cash in and cash out and how people can deposit and how can people make withdrawals of their money from their account. The fourth is how to prioritize in what use cases should we focus and develop our products. The fifth is more about the innovation in terms of the user experience and how important it is to provide the best user experience to really capture financial inclusion flows. And the final one is one that is really important, is how to design our models for financial education so that we can be more effective in this world where we have more technology tools at our disposal for this. Let me go and do a deep dive into the first one. This is very important because it really shows that there is a big gap in digital inclusion and financial inclusion. Latin America has been doing great in digital inclusion, thanks to the smartphones. Almost all adults above the poverty line has a smartphone with some kind of connectivity. But that is not the case in financial inclusion. That really lags behind in terms of the digital inclusion. There is a gap between those two indicators. And that tells us and gave us an idea on how to do a different segmentation for the market. And we're doing a segmentation on two axes. The horizontal axis really presents what is the infrastructure available where people live. And people may live in urban environments, semi-urban environments, and rural environments. And what we can see is that in semi-urban and urban environments, most of these areas already has a 3G connectivity and some networks of correspondent banking. That's very important for financial inclusion. And that's why we want to prioritize semi-urban and urban environments. On the vertical axis, we have the capabilities of the person. What can the person do as an individual? And we can see that these capabilities really expand with the use of a smartphone. So the smartphone is really a very important element on the priority segments. And the second one, which is a challenge in some countries, is having means for a or a for having a an identification that is backed by a official or a government institution. And that's important because in setting up some of the accounts, our processes for anti-money laundering require some kind of identification. So what we're saying is we should focus in these semi-urban and urban and people who have incipient or complete capabilities defined by these indicators, no smartphone and official identification. And this is very important because the reality in Latin America has been evolving from financial inclusion to be a rural challenge to now a semi-urban and urban challenge. In our countries, the majority of people now live in semi-urban and urban around the big cities. These, you know, semi-urban areas or belts around the cities have been evolving and have different names in different countries. In Brazil are called favelas, in other countries are called barrios. But these are very important because that's the prime target for our financial inclusion efforts. Let me go to the second one, the second lesson. After this one that we have focused on a different kind of segment. The second one is having a really 360 approach to all of the flows and all of the needs of the person. I think that in the past, the financial inclusion efforts have been focused on one or two flows, what we used to call champion flows. You could either have an account or a card for receiving benefits from the government, or a card for using that in mass transit. Now, the best approach that we have found is to really have a card that can serve you in all of the needs that you have, 360. All of the inflows that you have, cash in from government, from businesses, and even from P2P sources, and also the outflows from the same categories, cash out, uh, consumer to business, consumer to government, or P2P. In consumer to government is particularly important utilities. We'll see that in the next slide. And finally, to really adapt the models that we have from face-to-face ways to service our clients to really digital means to do it, so that people can open an account, close an account, and really provide all of the services that you need to maintain your account on a digital way. In the past, unfortunately, we have pushed our customers to branches, bank branches, and that's really inconvenient. And now the digital tools allow us to have an end-to-end digital experience that you can leverage. Let's go to the third lesson. The third lesson is really about how to reduce the friction on cash flows. I believe that this is one of the most critical lessons that we have learned. We have to make sure that deposits and withdrawals are really painless, and painless from two perspectives. The perspective of pricing, making sure that you don't have to pay to make deposits, or you don't have to pay to withdraw the money that you have in your account. This kind of friction is really important because if there are prices for deposits and withdrawals, our consumer really very quickly learns that they only have to deposit as little as possible and to withdraw only whatever is necessary, and in a single shot. No, they tend to take all of the money that they can in a single shot to minimize those costs. The second kind of friction is the access, and making sure that they can do that in a number of establishments, locations, or merchants. And there are two ways to do it. Obviously, in Latin America, the banking agents networks have been growing very aggressively. Brazil and Colombia are great examples on how that's been emerging. That's important because it allows you to do deposits in a number of establishments, merchants, easily. The second one, which is a very important use case, is how, particularly in Mexico and in other countries, you can ask for cash after paying for your groceries with your debit card. And after that purchase transaction, you can ask your cashier, hey, can I have 300 pesos or 500 pesos? And that's a really free and easy way to get access to your funds in your account. And that is as, as available as all of the major supermarket chains. So that's a great opportunity so that we can communicate that to your clients, make them aware that these exist, and minimize the cost for withdrawing money. Again, this third lesson is very, very important, and I think that a major lesson also has been on how the business models of the different fintechs and financial institutions have been evolving from getting revenues from deposits and withdrawals into other sources of revenues that will go deeper on lessons 4 and 5. But this is really important to make sure that we make good progress with our customer base. Let me go to the next one, the fourth lesson. The fourth lesson is really about how we prioritize some use cases that are critical to have success. In the past, I think that most financial inclusion efforts have been focused on face-to-face use cases, mostly those about doing grocery purchases in small mom and pop stores called changarros in Mexico, pulperias in Costa Rica. Every country has a different name for these small stores that really serve small communities, particularly in the grocery stores. Although that's a very important use case that has been targeted by some of the new technologies for dongles that work with a smartphone, and payment aggregators have been really successful in doing that. I want to drive your attention to remote use cases, because in a face-to-face, you can either pay with a dollar, but with a bill, or with your card. And really the convenience is very similar, or sometimes paying with a bill or with cash is it's more convenient than paying with a card. But that's not the case with remote use cases. In the case of remote use cases, there are huge benefits for our clients, and that's where we should focus our attention, because that creates the more loyalty and the more adoption. The first remote case is payment of utilities and services, typically to the government. Here is very, very important, because we have to adapt and reduce the frictions of doing that payment. We have to make it easy. And there are some providers that have gone even further, providing the balance for whatever you owe to the electricity provider or the water utility, and also to confirm that the payment has gone through and that the payment that you have done has been credited to your account. So that's really, really important for having success there. The second one, which is really important in our countries, particularly Mexico, Central America, the Caribbean, and some of the countries in South America, are digital remittances. We have educated consumers to do cash-to-cash remittances. People inputting cash in the US and people withdrawing cash in Latin America. Now there are new tools to do a full digital card-to-card remittance in Latin America. And that's really convenient, because now people do not need to go somewhere to withdraw all of the money with all of the safety and security concerns that this may bring. Now you can have it in your account in seconds and in a very, very convenient way. It requires a bit of education or re-education of our consumers, but this is one of the ones that is most profitable for the financial institutions and most convenient for our clients. Finally, G2C flows, and that's about pensions and government benefits that people would receive. If we make sure that we are prepared to receive those benefits in the account or card of our customers, these create also great loyalty and usage. Again, the key message here is the past focus has been on acceptance in mom and pop for groceries. Now the focus is on enabling and the customer experience for remote use cases. Let me go to the fifth lesson. The fifth lesson is also very important because the battle for financial inclusion will be won through providing the best customer experience and in the digital means that we provide. And we have segmented the use of the different customer journeys in 4 stages of the life cycle of a client. The first one is on acquisition of new clients. And there are new technologies that are enabling better customer experiences. The first one, which is very important for acquiring new clients and providing credit to them, is doing the risk assessment with alternative data. The industry has been for years using credit bureaus to assess the credit worthiness, but now we have more and more tools to use alternative data for that, and for using machine learning to educate our models and really be able to provide credit for those who have no credit bureau or a thin file within that credit bureau. The second one is on having 100% digital file. This is important because up until today, many financial institutions, after doing the whole process digitally, at the end, they require the customer to go to a branch and provide physical copies of IDs and etc. And that really breaks the whole experience that we want to create. I think that, for an acquisition of a new client, we should really target doing that 100% digitally and in 5 to 10 minutes, no more than that. And the final one is open banking. Open banking has been evolving in different countries in Latin America. I think Brazil and Colombia ahead of the pack in the implementation of open banking. And that really can help you to provide pre-filled forms and to have many elements of the fields in your application and your credit application that used to be filled by hand or digitally typing, and now you can have them pre-filled, just making sure that your user validates that the information that you have is accurate. Let me go to the second one, onboarding, which is also very important. There are new technologies that are making onboarding 100% digital. The first one is what is called digital first provisioning. In digital first provisioning, after you have approved your client for a credit or debit card, you can provide that debit and enable your wallet in your cell phone, so that you can start using that in card not present or remote usage, or even in physical transactions with tools like Apple Pay or Google Pay. So that means that you don't have to drag your customer to a branch to pick up your card, or you don't have to really take care of the provisioning of that card in hard to access locations, because now you can start that process with 100% digital solution. The second one, which is also important, is models where you can use generic cards that are placed in numerous merchants. Um, let's call it product placing in convenience stores. You can have a generic card and then enable that card digitally, so that they can have both the digital card in their cell phone and their plastic. Again, this is only enabled now that we have new technologies that can help you implement that. And then you have the new solutions for the face-to-face usage. As I was explaining, contactless mobile has created a great new experience of paying. Um, you can do it, for example, like in Apple Pay, where you can just approach your cell phone to the terminal. It wakes up and you basically identify yourself with your fingertip or with your face, and then the payment has been done. That has been a new technology that has been evolving and gaining penetration in different banks and fintechs, um, thanks to tokenization and other tools that can help you with cryptography and making sure that the credentials of the card are secure. And the second one, which is also very interesting, is phygital solutions. No, and this is something like what happens in Uber, that although you're receiving a service that is face to face, you pay it as if it were a remote transaction, right? And you can incorporate more elements to that: loyalty, customer service, feedback from your clients. So these digital solutions, which is like really the merge of physical and digital environment in a single experience, I believe will have a lot of traction to really maximize uh, customer satisfaction and improve the customer experience of purchasing. The final one is remote use. And remote use cases are today, um, you know, hindered and contaminated by the problems of fraud and low authorization rates. But there are good news in here. We have three new technologies that will make remote usage as safe as a card present transaction, or a transaction where you present your plastic and you input your PIN. The first one is 3DS 2.0. And in 3DS is an ecosystem that allows you to authenticate your user. Now in this 2.0 version, um, it's a great experience because you don't have to remember static passwords that you most often forget. Now it's you get through digital means a one-time password, an OTP that you input very easily, and your financial institution, your bank, has full certainty that it's you who's making the transactions, and that reduces the problems with fraud and reduces the problems of valid transactions that do not get authorized. The second one is secure remote commerce, and as commonly known in the market as click to pay. This allows you to have a solution that has many advantages from economic perspective for the financial institutions, and many convenience features for the user. Um, it works similar to the experience that you have with, for example, with other providers of wallets, PayPal, for example, where you can insert your password. You can choose from a number of cards, and then you do it in a safe environment. And this is very important again because it will minimize the time required to import your card and to make sure that this transaction goes through. These two are very new trends in cybersecurity, and obviously I encourage you to learn more about these two. The final one is hyper-personalization, and we'll talk more about that, but it's really the ability for banks and fintechs to customize their marketing messages to really tackle the challenge that your client is having and to really talk to him in a personal way. This has not only very important impact or very important repercussions in how people can react to the marketing stimulus, but also in financial education. That leads me to the sixth lesson. The sixth lesson is how we evolve in our efforts from financial education to what I called hyper-personalized education or marketing. We used to do, let me describe the financial education that was typically done. It was knowledge-oriented. We were educating people on finances. It used to have a standard content, so same content, person to person, community to community. It used to be face to face, hybrid, and it was one person that went to a community, gathers, as many people as they could, and then presented or educate them in this content. And it was a training event. It was a one-time event. Now, let me contrast that with what new hyper-personalized marketing and education can do for you. Instead of being knowledge-oriented, it is really oriented about developing new habits and how to create those habits at the right time to the right person, given what they already know and given their past purchases. The second one is personalized content, because now with these tools, I can talk to the person with a personalized message that really tackles their needs and the different challenges that they have in their financial education or evolution. Instead of doing what used to be very expensive face-to-face trainings, now we can do that digitally with virtually no incremental cost or no marginal cost. And the most important thing is it is not a training event that happened and then you probably forget everything, but it's always on, always available to you. And it can be push messages just in time, at the right time when you need it, and at the right time when you're facing the challenges. So with that, those are the 6 lessons that we have for you. We obviously at Globant make ourselves available for you to help you in this evolution, in capturing the new technologies, and in understanding better your customers so that you can use them better. My name is Carlos Pacheco, and we'll be happy to help you here in Latin America with all your needs.